Berlin, October 1922. The opera houses are full. The champagne is cold. The German stock market is hitting all-time highs. The elite are dancing on the polished floors of the Adlon Hotel, convinced that the party will last forever, believing they are the untouchable masters of the modern world. Everything feels permanent, unshakable, and secure. 6 months later, the music has stopped. That same man who was toasting to prosperity is now pushing a wheelbarrow full of cash through the streets just to buy a single loaf of bread. He stops for a moment to tie his shoe, and when he looks up, the pile of money is still there, but the wheelbarrow has been stolen. The wood was worth more than the paper. You are watching this in 2026, sitting in the comfort of your home, thinking, that was them. That was a century ago. That can't happen here. You are wrong. Look at the charts. That vertical line on the national debt graph isn't a glitch. It is a mathematical inevitability. We are standing at the exact same precipice that swallowed the Roman Empire, the Weimar Republic, and the British pound. We are living through a financial great reset, an event that happens once every century, wiping out the ignorant and transferring massive wealth to the prepared. Here is the uncomfortable truth they will never teach you in school. You think the money in your pocket belongs to you? No, it is a liability. It is a debt note issued by a government that cannot pay its bills. And when a government runs out of options, they don't cut spending. They don't raise taxes. They choose the hidden option. They choose to dilute your life's work into worthless paper to save themselves. 10. But this is not a story about the end of the world. It is a story about a new beginning. The flood is coming, yes. But while the masses are paralyzed by the rising water, we are going to build a boat. Today, I am going to take you back in time to show you the future. We will dissect the corpses of dead empires to find the blueprint for survival in 2026. This is how you build your financial Noah's Ark. Welcome to the eye of the storm. To understand where we are going, we must first understand the graveyard of currencies that came before us. History is littered with the corpses of dead money. And if you listen closely, they all tell the exact same story. It is a tragedy in 3 acts, played out over thousands of years, yet the script never changes. The actors change, the technology changes, but the human greed and the laws of economics remain. Mark Twain famously said that history doesn't repeat, but it rhymes. Well, in the world of finance, it doesn't just rhyme, it screams. Let's rewind 2,000 years to the bedrock of Western civilization, the Roman Empire. We look at Rome and see marble statues and legions, but the real story of Rome's fall wasn't written on the battlefield. It was written in the mint. The Roman denarius was the reserve currency of the ancient world. It was a coin of pure silver, a symbol of trust that you could spend anywhere from Britannia to Egypt. But emperors, much like modern politicians, had a problem. They wanted to wage endless wars and host lavish public games to keep the population happy. But they didn't want to raise taxes. Raising taxes makes the people angry. So, they found a magic solution. Nero was one of the first to start the cheat. He ordered the mint to collect the silver coins, melt them down, mix in a little bit of cheap copper, and remint them. Suddenly, with the same amount of silver, he had more coins. It felt like free money. It was the ancient version of quantitative easing. At first, nobody noticed. The coins looked the same. But over the next 2 centuries, emperor after emperor repeated the trick. The silver content dropped from 100% to 90%, then 50%. By the time of Emperor Gallienus, the denarius was a copper slug with a thin wash of silver that would rub off in your pocket. It contained only 5% silver. Aye, they kai blood. The result was catastrophic. Merchants realized they were being paid in trash. They demanded more coins for the same wheat, the same wine, the same tunic. Prices skyrocketed. The soldiers, the backbone of the empire, demanded higher wages to keep up with inflation. To pay them, the state had to debase the currency even further. It was a death spiral. The economy collapsed from the inside long before the first barbarian kicked down the gates. Rome didn't die because it lacked swords. It died because it destroyed the trust in its own money. Inflation is not an accident. It is a policy. It is a hidden tax that destroys empires from the inside out. Fast forward through the centuries to a modern metropolis, Berlin, 1923, the Weimar Republic. This is the most terrifying example, because it happened in a highly educated, industrialized Western nation. It happened to people just like us. Germany had lost World War I and was crushed under the weight of war reparations. They owed mountains of gold to the Allies. Unable to pay, the government made the fatal decision: turn on the printing press. At first, it felt like relief. The government paid its workers, the factories kept running. But money is like a drug. The more you use, the less effective it becomes. Soon, the psychological phenomenon known as the flight from currency began. The German people realized that their money was melting like ice in the sun. If you got paid at 12 p.m., you had to run. Literally, run to the grocery store to spend it by 12:15 p.m. Because by 1 p.m., the prices would have doubled. There is a famous story from this era that captures the horror perfectly. A university student walked into a cafe in Berlin. He ordered a cup of coffee. The price on the menu was 5,000 marks. He sat down, drank his coffee, read his book, and enjoyed the atmosphere. 30 minutes later, he asked for the bill. The waiter said, "That will be 8,000 marks, sir." The student was furious. "But the menu says 5,000. The waiter shrugged and replied, "That was the price when you ordered." The dollar exchange rate just shifted. "I'm sorry." Think about the psychological trauma of that moment. A lifetime of savings, inheritance from grandfathers, dowries for daughters, pensions for the elderly, was wiped out in weeks. The middle class was pulverized. They did everything right. They worked hard, they saved, they were loyal citizens, and they were punished for it. This total destruction of the currency created a vacuum of power and anger that eventually allowed a dictator to rise. When money dies, society unravels. The chaos of the hyperinflation prepared the soil for the darkness of World War II. But you might argue, the US dollar is not the Weimar mark. America is the world superpower. That brings us to our third ghost, and perhaps the most relevant one for 2026, the Suez Crisis of 1956. This is the story of how a superpower loses its crown without firing a single shot against its rival. In 1956, Great Britain was still a global empire, albeit a wounded one. When Egypt nationalized the Suez Canal, Britain, along with France and Israel, launched a military invasion to take it back. Militarily, it was a success. Their paratroopers seized the canal. They won the battle. But then, the United States intervened. President Eisenhower didn't send aircraft carriers to stop the British. He made a phone call. The US government told the British, "Get out of Egypt, or we will crash your economy." How? America threatened to sell off the massive amounts of British pound sterling bonds it held. They threatened to dump British debt onto the open market. This would have caused the pound to collapse, destroying the British economy overnight. The British Prime Minister, Anthony Eden, had no choice. He didn't look at his generals. He looked at his bankers, and they told him, "We are broke." Britain humiliated itself, withdrew its troops, and the Prime Minister resigned. That moment marked the official end of the British Empire. It proved that in the modern world, true sovereignty isn't about how many tanks you have. It's about who owns your debt. If you are a debtor nation, you are a slave to your creditors. Look at these three ghosts. Rome teaches us that debasing currency to fund deficits destroys the state. Weimar teaches us that once trust is lost, the value of money hits zero with terrifying speed. Suez teaches us that debt is a weapon, and if you owe too much, you are no longer the master of your own destiny. Now take a deep breath. Look at the United States in 2026. The debt is skyrocketing. The currency is being debased. Foreign nations are holding the debt. The ghosts of Rome, Weimar, and London are all in the room with us. They're screaming a warning. The question is, are we listening? Because the cycle is closing. And this time, the scale is global. Welcome back to the present. Welcome to 2026. If the ghost of Rome, Weimar, and the British Empire were whispers in the hallway, the reality of the American economy today is a fire alarm ringing in a locked room. We are no longer looking at historical theoreticals. We are staring down the barrel of a perfect storm. A convergence of three massive macro forces that have never hit simultaneously in our lifetime. The debt wall, the weaponization of trust, and the return of hard assets. Let's start with the elephant in the room. Or rather, the Leviathan, the United States national debt. For decades, we were told debt didn't matter. We owe it to ourselves, the economists said. They treated the national debt like a scorecard that could go up infinitely with no consequences. But mathematics is a cruel mistress. She always collects. By 2026, The U.S. national debt has spiraled past $38 trillion. These numbers are so large they become abstract, so let's humanize them. For the first time in history, the United States government is spending more money just to pay the interest on its debt than it spends on its entire military. Think about that. We are spending more to service the sins of the past than to defend our future. This creates a terrifying feedback loop known as the debt-death spiral. To pay the interest, the government must borrow more. To borrow more, they must issue more treasury bonds. But who buys them? In the past, the world lined up to buy American debt because it was the risk-free asset. It was the safest place to park money. But what happens when the risk-free asset guarantees a loss? This brings us to the second, and perhaps most critical, pillar of this storm, the weaponization of finance. We have to go back to a specific date. February 26, 2022. This is the day the global financial system fundamentally broke, though most people didn't realize it until years later. When the conflict in Ukraine escalated, the United States and its allies made a decision that changed the unspoken rules of global banking forever. They froze $300 billion of Russia's foreign exchange reserves. Now, put aside your feelings about the war. Put aside politics. Look at this purely through the eyes of a cold, calculating banker in Beijing, Riyadh, or Brasilia. For decades, the deal was simple. You sell oil or goods to America. You get dollars and you park those dollars in U.S. Treasury bonds for safekeeping. It was a contract of trust. But on that day, in 2022, the message sent to the world was clear. Your money is yours only if we agree with your politics. If we don't, we can turn your savings off with the flick of a switch. The dollar went from being a neutral medium of exchange to a political weapon. And in the world of high-stakes geopolitics, if you turn a currency into a weapon, your rivals will stop using it. They have to. It becomes a matter of national survival. This triggered the silent exit. You don't see it on the nightly news, but look at the data. Since that day, the global demand for U.S. treasuries from foreign central banks has collapsed. China has been methodically dumping U.S. debt. Japan is struggling to hold on to theirs. The BRICS Plus alliance, Brazil, Russia, India, China, South Africa, and their new members are not just forming a trade club. They are building a lifeboat. They are actively creating payment rails that bypass the SWIFT system, bypass the dollar, and bypass American oversight. They are not doing this because they hate America. They are doing it to immunize themselves from American sanctions. So, if they aren't buying dollars, what are they buying? This leads to the third force, the return to reality. For 50 years, since 1971, we have lived in a world of fiat, money, by decree, backed by nothing but faith. But faith is evaporating. Central banks around the world are currently buying gold at a pace not seen since 1967. Why gold? It feels archaic, doesn't it? A shiny yellow rock. They are buying gold because it is the only financial asset that is not someone else's liability. If you hold a U.S. Treasury bond, you hold a promise from the U.S. government to pay you. The promise counterweight. If you hold a dollar, you hold a debt note. But if you hold a bar of gold, you hold an asset that requires no counterparty to honor it. It is the only neutral money left. The BRICS nations are accumulating tons of it, preparing for a world where trade is settled in something real, not in paper promises printed in Washington. We are witnessing the grand cycle that billionaire investor Ray Dalio warned us about. He studied the last 500 years of economic history and identified the big cycle of empires. Every empire follows the same arc: the rise, the top, and the decline. The rise is built on strong education, hard work, and savings. The top is characterized by the currency becoming the global reserve standard. But the decline is always marked by the same three symptoms: massive debt and money printing. The country spends far more than it earns and prints money to cover the difference. Internal conflict. The gap between rich and poor widens until the population is at each other's throats. Does that sound familiar? The political polarization in the U.S. is not a bug. It's a symptom of an empire in late-stage decline. The rise of a rival power. A challenger emerges to threaten the hegemon's dominance. Today, that is the Eurasian bloc, led by China and Russia. We are currently checking every single box of Stage 6 in Dalio's cycle, the phase immediately preceding the reset. The U.S. government is trapped. If they raise interest rates to fight inflation, they bankrupt the economy and the government itself. Because the interest on the debt becomes unpayable. If they lower rates to save the economy, inflation roars back and the dollar loses value. They are playing a game of pick your poison. And historically, governments always pick the same poison: inflation. They will choose to sacrifice the value of the currency to keep the system afloat for just one more day, one more month, one more election cycle. This is the perfect storm of 2026. A massive debt wall that cannot be repaid in real value. A geopolitical world that has lost trust in the dollar as a neutral reserve. And a desperate pivot back to hard assets by the smartest money on the planet. The water is rising. The dam is cracking. And the vast majority of people are still standing in the valley, arguing about politics, completely unaware that the reservoir above their heads is about to burst. But you are watching this. You see the cracks. The question now is no longer what is happening. We know what is happening. The question is, what do I do? How do you protect your labor, your time, and your family's future when the very unit of measurement, money itself, is broken? We stop looking at the problem and we start building the solution. We start building the ark. The storm is not a probability. It is an arrival. But here is the good news, the secret that the panic sellers and the doomsayers often forget. Chaos is a ladder. Every single financial collapse in history, from the fall of Rome to the Great Depression, was also the greatest wealth transfer of its time. Wealth is never destroyed. It merely changes hands. It moves from the fragile to the anti-fragile, from the unaware to the prepared, from those holding paper to those holding value. So, how do you ensure you are on the receiving end of this transfer? How do you build your ark? Rule number 1 requires a brutal shift in mindset. No one is coming to save you. The cavalry is not coming. In fact, the cavalry is currently busy inflating away your savings to pay for their own mistakes. To survive 2026 and beyond, you must stop thinking like a consumer and start thinking like a sovereign central bank. The first plank of your ark is eliminating counterparty risk. Most people live their entire lives exposed to this risk without knowing what it is. When you deposit your hard-earned money into a bank, you think you are putting it in a vault. You are not. Legally, the moment that cash crosses the counter, it is no longer your money. It becomes the bank's money, and you become an unsecured creditor. You hold an IOU if that bank gambles and fails, or if the government decides to bail in the bank using depositor funds, as we saw in Cyprus and Lebanon. You join the back of the line. The solution? You must move a portion of your wealth outside the system. You need assets that have no liability attached to them. Assets that do not rely on a CEO's promise or a politician's whim. This leads us to the distinction between paper assets and hard assets. In a stable world, paper assets like tech stocks and government bonds are fantastic. They are efficient. But in a world of high inflation and currency debasement, paper burns. You need things that cannot be printed. This is why the foundation of your portfolio must be the barbarous relic, gold. Gold is the only financial asset that has survived for 5,000 years without defaulting. It is not an investment to make you rich. It is insurance to keep you from becoming poor. It is the anchor of your ark. But an anchor doesn't move. To capture the upside of this digital age, you need to look at Bitcoin. Now, strip away the hype, the memes, and the price volatility. Look at the technology. Bitcoin is the first asset in human history that is strictly finite. 21 million coins, no more, no less, and can be sent anywhere in the world without a permission slip from a bank. In a world where governments can freeze accounts and debase currencies at will, a censorship-resistant, uninflatable digital asset is not a speculation, it is a necessity. But remember the golden rule: not your keys, not your coins. If you leave your Bitcoin on an exchange, you have just reintroduced counterparty risk. You must hold the keys yourself. Next, look at the ground beneath your feet. Land, productive farmland, forestry, or even a home with a garden. When the currency wobbles, people still need to eat. They still need shelter. Real estate is a hedge against inflation, but be careful with leverage. In a high interest rate environment, debt is a chain around your neck. The goal is ownership, not mortgageship. However, your financial portfolio is only half the battle. The other half is human capital. We are entering an era of stagflation, stagnant growth and high inflation. In this environment, the Zoom class, the white-collar middle managers whose job is sending emails about other emails, is the most vulnerable. AI is coming for the mediocre office jobs first. To survive, you must become useful in the physical world. Invest in skills that cannot be digitized or outsourced. Can you fix an engine? Can you grow food? Can you perform first aid? Can you build? These blue-collar skills are becoming the new gold standard. In a crisis, the person who can repair the generator is worth 10 investment bankers. Finally, the most underrated asset of all, the network. The lone wolf prepper mentality is a Hollywood fantasy. In reality, lone wolves starve. The strongest survival unit in history is the tribe. Your net worth is your network. Who can you trust when the ATM stops working? Who will watch your back? Building a community of like-minded, capable people, your neighbors, your friends, your family, is the ultimate insurance policy. A stockpile of gold is useless if you are alone. A community can solve problems money cannot. The script for the future is being written right now. The Great Reset is not a conspiracy theory. It is a structural economic correction. It is painful, yes. It is scary, yes. But for those who build their arc, diversifying out of the dollar, holding hard assets, sharpening real-world skills, and building strong alliances, it is the opportunity of a lifetime. The flood is coming. Don't just stand there watching the rain. Start building. We do not get to choose the era we are born into. We only get to choose how we respond to it. The financial storm of 2026 will be ruthless to the unaware. It will wash away the comfortable illusions of the past century and punish those who believed that debt could grow forever without consequence. But for you, the awake, the prepared, this is not an apocalypse. It is a correction. It is the greatest wealth transfer in history, waiting to be seized. The old world is fading. Make sure you are standing on solid ground when the new one arrives. Do not let fear paralyze you. Let it sharpen you. Don't panic. Prepare. But the question remains, what exactly goes into the ark? Is Bitcoin the future, or is gold the only truth? In the next video, I will break down the ultimate 2026 portfolio, pitting the ancient king against the digital rebel. Hit subscribe and turn on notifications. The clock is ticking. I'll see you on the other side.